Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 84, published on June 3rd, 2022, titled Gun-Free Funds and Eco-Crypto Picks, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Also, just a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. With all the talk about the horrific gun violence in the US, investors often wonder if they can invest in gun-free funds. This article on MarketWatch provides insight into one such fund. It's titled, Opinion: This pacifist, faith-based fund management company is fighting gun violence in its own way. It's by Debbie Carlson. Here are some quotes from Debbie. Faith-based investment funds have long tried to reduce gun violence through advocacy with some success. One fund family, Praxis Mutual Funds, has worked on this issue in conjunction with other faith-based groups for at least 20 years. The fund manager follows pacifist values, so it has no weapons investments in its $2 billion of assets. Mark Regier, Vice President of Stewardship Investing and Director of Sales for Praxis Mutual Funds in Goshen, Indiana, spoke to MarketWatch about the company's work, some of the limits of investor advocacy, and a solution he wishes for. MarketWatch. Faith-based investment funds have tried to reduce gun violence for many years now. What are some of Praxis' efforts? Regier? Starting in 2018-2019, we started looking at how the credit card companies and banks are involved. Citigroup imposed new restrictions on lending to retail clients involved in the gun business. Car rental companies like Hertz and Alamo, national hotels like Wyndham and Best Western, airlines like Delta and United stopped offering National Rifle Association-related promotions. We've been involved with conversations that led to Dick's Sporting Goods and Walmart ending the sales of some of their weapons. Kroger has chosen to exit the firearms business. MarketWatch. Many gun manufacturers are small-cap and mid-cap stocks, so the direct financial effect is limited. But it's the cultural aspect that looms large and makes it a tougher fight. That's what it sounds like. Regier. On the cultural issue, there may be lessons learned with the advocacy of reducing tobacco use, like media not making it sexy. There's a lot to be explored there to apply to lowering gun violence. But the hill to climb on this issue is a lot tougher because our cultural attachment to the renegade, lone justice-seeking gunman. We also have easy access to guns and a desensitization to violence as a solution. Market Watch. How can investors think about this issue? Roger? It's an opportunity to reflect on one's own values, to understand how deeply do they go. I think then you begin to look at fund families that are out there that are not just carrying some ESG label, but they are actually working beyond that are doing shareholder advocacy. End quotes. In his next article, you'll find another faith-based fund as well as an ESG fund that is also gun-free. It's titled Values-Based Investing, 3 ESG Sharia-compliant ETFs to Know by Elisa To. It's found on sif.com. Please note, though, that only the first fund might fully conform to Islamic law. Here are quotes from the article. Many people want to make sure they aren't investing in companies that go against their beliefs and values. This growing sector includes Sharia-compliant investments as well as funds screened through environmental, social, and governance ESG factors. Here are 3 ETFs to consider. 1. SP Funds S&P 500 Sharia Industry Exclusions ETF. This fund invests in companies within the S&P 500 index, excluding those that don't comply with Islamic law, i.e., firms involved in alcohol, tobacco, gambling, weapons, pork products, adult entertainment, credit cards, and charging interest. The ETF also screens out companies with a lot of debt. The top holdings in this fund include Apple, Microsoft, Alphabet, and Tesla. Overall, the ETF has 215 holdings, less than half of a S&P 500 ETF like SPY, that's SPY. In terms of performance, in 2021, this fund rose 35.2% versus SPY's 28.6%. This fund is offered by SP Funds, a fund manager dedicated to halal, Sharia-compliant financial solutions. The fund has an expense ratio of 0.49%. The second fund is iShares ESG Aware MSCI USA ETF. This fund gives investors exposure to large and mid-cap US stocks with favorable ESG ratings. It's designed for the long term. The fund has an MSCI ESG fund rating of AAA, leader, and excludes companies involved in civilian firearms, controversial weapons, tobacco, thermal coal, and oil sands. Some of its top holdings include Apple, Microsoft, Nvidia, and Johnson & Johnson. The fund has an expense ratio of 0.15%, making it one of the cheaper ETFs in the ESG space. Third fund is Engine Number 1 Transform 500 ETF. This fund aims to bring about transformation changes in companies through shareholder activism. The activist hedge fund behind the ETF, Engine Number 1, came into prominence after winning 3 ExxonMobil board seats in June 2021. The ETF buys shares in 500 of the largest US stocks and aims to lobby other shareholders of these companies to vote in favor of climate change and ESG agendas. It carries an expense ratio of just 0.05%, similar to most low-cost S&P 500 ETFs. End quotes. Now we return to a familiar theme evident from this next article's title. This renewable energy stock is plugging into two potentially massive market opportunities. It's by one of our great regular analysts, Matthew DiLallo, from Fool.com. Here are some quotes. Brookfield Renewable started as a hydroelectric power producer. It has since become a large-scale renewable energy company by adding onshore wind, utility-scale solar, distributed generations, e.g. rooftop solar, and energy storage platforms. It is one of the largest renewable energy producers in the world. Recently, the company added two new potentially massive long-term growth drivers in green hydrogen and carbon capture. The economy needs a versatile fuel like natural gas to help manage seasonality and renewable energy's intermittency issues. Many believe that green hydrogen could be the solution. Brookfield is seeking to tap into the hydrogen opportunity. In late 2020, it agreed to supply renewable energy to fully energize a planned green hydrogen plant by Plug Power. Brookfield Renewable is also joining forces with energy infrastructure giant Enbridge to build a green hydrogen plant in Canada. Brookfield Renewable also sees a bright future in carbon capture. That recently led it to invest in a leading North American modular carbon capture solutions provider. These emerging industries could be major growth drivers. End quotes. Now, many of you seek dividends from quality ESG companies. This article might pique your interest. It's titled, Kraft Heinz, a top socially responsible dividend stock with 4.3% yield, at Forbes.com from the Dividend channel. Here are some quotes. Kraft Heinz has been named a top socially responsible dividend stock by Dividend channel, signifying a stock with above-average dividend rank statistics, including a strong 4.3% yield, as well as being recognized by prominent asset managers as being a socially responsible investment. According to the ETF Finder at ETF Channel, Kraft Heinz is a member of the iShares USA ESG Select ETF, which owns $4,959,267 worth of Kraft Heinz shares. End quotes. Numerous investors today are buying cryptocurrencies. For ethical and sustainable investors, which ones should they favor? This article might help you. It's titled, The 5 Best Eco-Friendly Cryptocurrencies by Justin Freeman. It appeared on AskTraders.com. Here are some quotes from Mr. Freeman. One of the biggest challenges facing cryptocurrencies is the amount of energy needed to operate the blockchain systems which support them. Bitcoin and Ethereum currently use as much energy each year as Argentina, Malaysia, and the Netherlands. The accounting methodologies of Cardano, Polkadot, Ripple, and Tezos have been designed to use less energy. They also offer faster processing times and a range of other features which make them better equipped to take crypto to the next level. Now he describes them. 1. Cardano. Cardano was founded in 2015 and launched in 2017 by Ethereum co-founder Charles Hoskinson. The aim was to take the best bits of Ether but use proof of stake, POS, protocols to manage the blockchain. POS is a much more eco-friendly methodology than proof of work, POW, system used by Bitcoin and Ether. Second cryptocurrency, Ripple. The Ripple network cuts down on its carbon footprint by using trusted validators to confirm transactions and keep track of its XRP tokens. The fact that all XRP coins have already been mined also helps, and Ripple has a stated aim to be carbon neutral by 2030. An SEC lawsuit hangs over Ripple. The case was brought against the firm in 2020, but when it is resolved, the price of XRP could be expected to rise. Third cryptocurrency, Tezos. Tezos uses liquid proof-of-stake protocols to manage its consensus mechanism. The energy savings are substantial and have also been audited by the internationally recognized accounting and auditing firm PwC. Fourth currency, Polkadot. Polkadot uses POS protocols to take energy efficiency to another level. The Crypto Carbon Ratings Institute, CCRI, found that Polkadot emerged as the network with the least electricity consumption compared with Ethereum, Solana, Bitcoin, and other top cryptocurrencies. The fifth coin, BitGreen. BitGreen was created to offer an eco-friendly alternative to Bitcoin. It uses proof-of-stake protocols, and there is no need for energy-intensive mining of new coins. Energy saving is part of the coin's DNA, and it draws on behavioral science to encourage behavior which is good for the environment. Users are rewarded for actions such as drinking sustainable coffee, carpooling, and volunteering. End quotes. Now some thoughts from a crypto enthusiast who's also a socially responsible investor. Here's the title of her article. Here's Why I'm Putting My Crypto Investments on Hold by Emma Newberry in the Motley Fool. Now some quotes from Miss Newberry. I'm passionate about cryptocurrency. More recently, I've paused my crypto purchases, at least for a little while. To be clear, I'm not selling any of my existing investments. I plan to hold for at least 10 years and probably more. And I'm earning decent rates of interest on many of my crypto assets. However, for me, it's a good time to take a step back. Here are 4 reasons why. 1. My portfolio is out of balance. 2. I want to see what regulation will bring. 3. The market may well fall further. 4. I'm increasingly uncomfortable with the shadier side of crypto. I'm extremely conscious about the way I spend and invest my money. I opt for fair trade products and prioritize socially responsible investments. In crypto, I'm a big fan of Cardano, which has a mission to use blockchain to make the world a better place. But there are still too many elephants in the room to think that crypto is an ethical investment. Here are a few. Money laundering, ransomware, lack of transparency, and over-reliance on stablecoins. Bottom line for her, cryptocurrency remains an exciting and fascinating industry with huge amounts of potential. However, it also carries a lot of risk. End quotes. Well, these are my top news stories with the stock and fund tips for this podcast. Gun-free funds and eco-crypto picks. To get all the links and stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope in these terribly, deeply troubled times. Contact me if you have any questions. Thank you for listening. Talk to you next on June 17th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.